Good morning, ladies and gentlemen. I hope everybody has enjoyed the gala dinner last night. Now it's time to start the third and last session of the 89th IREPAS meeting. As always, we will be discussing with the chairman of IREPAS committees. But before we start the third session, I'd like to have a minute or two to complete the plaque ceremony of last night. As I have announced last night, Mr. Alex Gordienko had a very last minute issue, and he was not with us last night during the ceremony. So I'd like to invite Mr. Alex Gordienko to the stage to present his plaque, and I'd like to invite Mr. Chairman, Mr. Murat Cebecioğlu, for the presentation.
Very nice. So, there you go. Thank you.
Thank you very much, Mr. Chairman.
Thank you.
Okay, now time to continue with our panel. As always, we will be listening to the findings of the respective IREPAS committees, and then I'll be directing the questions we have already collected to the chairman of the committees. Shall we start with the Raw Material Suppliers Committee, Jens?
Why not? Why not? All right. Good morning, everyone. So at this session here in Istanbul, we've had record attendance from, in general, and also from the Raw Material Committee side. I believe on Friday there were 105 delegates registered, which is far beyond any other conference we've had. So just shows that this is an important meeting forum for raw materials suppliers to meet both customers and peers to make understanding of what is going on. So the findings from the Raw Material Committee, we had a lively discussion around the table and discussed all sorts of topics. Of course, mainly from their domestic sides of the respective companies. But when we look at the general picture of the market and on the globe, of course, China has a large impact on whatever we are doing everywhere else. And China is clearly slowing growth, around 3% at the moment. And consumption of steel is slowing down. Production is maintained at high levels, which has meant for the past months that China is exporting around 8 million tons of steel products every month, and are looking to annualize top of the 2015 records of 85 million tons. Going forward, we could see there's signals at least that environmental cutbacks could be possible for the winter season, heating season, when coal is needed for heating. Could be a possible way to dampen the production in China. Could be a positive factor going forward in the winter time, but remains to be seen. It seems to be very difficult for China to tackle production. Otherwise, the powerhouse at the moment is India, growing at substantially higher rates than previously, and steel industry is also has a strong growth. Raw material are attracted to India at the moment. It has also been a stabilizing factor for example, ferrous scrap in the past month or so, or even beyond that. So going forward, it would be interesting to see if India can absorb as much scrap as needed. But in general, there's been a good outlet for ferrous scrap. USA still outperform most of the rest of the world in economic and business churn. It generates decent scrap volumes, and with a little slight decrease in demand, which we've likely seen in the past, we've also seen a greater amount of exports. The European sector has been forced to cut production due to low demand, especially in the construction sector. Europe is reeling from high interest rates, and which could be peaking in the next round of interest rate hikes. But lower industrial construction activity has slowed scrap flow dramatically. And Germany has, in some cases, seen drops of 30% or even more. And it's going on in the region around the main industrial sites. So the economy of Germany is in a recession, and we're likely seeing this similar in other regions. So even though demand has slowed down after the summer, which was a period where mills were idling extended periods, the generation of scrap volumes has been yet slower. For the remainder of the year, industry will likely continue to generate low volumes of ferrous scrap. Turkey has seen slowed production rates since the peak of 2021. And this year is slower than last year, but yet the business keeps generating demand. The market is expecting the economy is of course reeling from even higher inflation rates, and currently expecting another rate hike of 5% to get us up to 30% in Turkey. Participants in the raw material committee recognized the difficulties, but were also amazed about the resilience of the Turkish steel producers. This year's in the fall, we are experiencing far lower electricity prices than last year, when Russia was limiting gas and there was energy crisis going on in Europe. And we also see so we see lower energy prices in general. Of course, we're currently experiencing high oil prices and bunker fuel prices and high freight rates, but production-wise, the energy costs have come down and perhaps are on their way up. Stimulus activity in China, along with possible production curbs, could lead to slightly positive outlook, but at the moment, the European and US markets are very hesitant. So difficult to say at the moment what we can make of it.
Thank you very much, Mr. Björkman. Now let's continue with the Traders Committee. And yes, Mr. Baysal, can we listen to you?
Okay. Good morning, ladies and gentlemen. Thank you, IREPAS and SteelOrbis, for inviting me to address in this beautiful, historic city of Istanbul. At our Traders Committee meeting, we tried to answer the questions sent to us prior to the conference from our audience. We had questions on the steel consumption and the new restrictions that we face from Europe and China. However, the majority of the questions were naturally on China. Ironically, there were no questions on United States. I guess the traders lost their interest in America. On Europe, we discussed the present situation in Europe, which has changed dramatically. In fact, just like the United States, as you all know, the interest rates went up from 0 to 5% in EU and 0.25 to 5.5% in the US. Consequently, the investments in construction slowed down considerably. Because of low demand for steel, the prices have come down as well, actually to a point where German rebar is now cheaper than most of the developed world. We learned that even the quota established for Turkey for the third quarter of 2023 has not been fully utilized. Because of all this slowing down, we concluded to expect Europe to tighten the future quota limitations for the others group, which includes countries like Algeria and Egypt. We had long discussions on China. Chinese real estate market is in serious trouble. We noted that after the collapse of the second largest real estate company, Evergrande, now the biggest one, Country Garden, also have collapsed. This is due to the government's reversing of its policy and no longer supporting the housing industry, where people were buying homes for investment purposes rather than to live in. This reversal of policy made the housing prices collapse and the new construction on standstill. However, now to improve the housing situation, the government has decided to lower the interest rate to 4.5% for people who wants to buy the first or the second home. I guess time will show if this problem will be solved and this giant economy will continue in the long run. One important note, though, on China, in spite of all this, Chinese did not reduce the steel production. Today, they are producing same level and slightly higher than the 2022 levels. This is a concern for the whole world and us traders. If the country cannot utilize the full capacity, that capacity will be for exports. We therefore have to expect increase in Chinese steel in the coming years if we do not see the reduction in the production levels. We had discussions on Turkish steel and the effects of Ukrainian war on the region. We concluded that the beginning of the war, a lot of raw materials came from Russia to Turkey, but lately this has substantially reduced due to the pressure from Europe and USA. On the other hand, Turkey lost most traditional markets. With this reduced export demand, some Turkish mills had to cut down production, and the Turkish rebar exports went down by 50%. The rebuilding of the earthquake zone in Turkey did give some breathing ground to the local mills, but not enough to offset the loss of the export market. Russian billets were discussed. Russian billets were initially used in rebuilding the earthquake zone, as the local mills had prior engagements and some really got damaged. But this has completely changed, and we concluded that the earthquake zone is now 100% supplied by the domestic production. In Saudi Arabia, the recent investment in the steel mill Hadid by the Saudi Arabia's Public Investment Fund was discussed. We were told that the main reason was for the upcoming investment in the giant NEOM project in Saudi Arabia. It is estimated that 1 million tons per month will be utilized for this mega project. We also talked about shipping. We welcome the reduction of shipping prices and hope that it will continue, even though the increase in oil pricing will probably affect the future shipping prices. Regardless, recent shipping prices gave some hope for the traders to continue to be competitive in certain distant markets. This is generally what we discussed. Thank you very much.
Thank you very much, Mr. Baysal. Now it's turn for the Producers Committee. Mr. Chairman.
Welcome again. Good morning. Well, again, we have discussed many topics, more or less the same as my colleagues have explained. We have our problems, our issues are the same. But before starting, I'd like to give you some numbers for attendance. As Jens explained, we have a record number of attendees. On producer side, we have 217 delegates from 61 companies and 20 different countries. Having said that, let me continue. I'll also give you some specific country-specific numbers and information as we have gathered yesterday's meeting. In general, it's been said that the economy's long products market is slowing down and hurting many markets. Money credit supply is a major issue. It's in some countries it's very difficult to find this. They can not even open LCs. Demand is very weak and puts pressure on prices from new exporters. When I say new exporters, the way of doing business have changed as there are new exporters in the markets where they used to be importers, like Egypt, Algeria, some GCC countries. All these countries used to be importers, especially buying heavily from Turkey and from the other countries. But today, unfortunately, Turkey cannot do what it used to do in exports due to protectionist measures from the USA, anti-dumping and CBD duties, and Canada. As you know, there are normal values, which is so high, not possible to sell anything. And Europe, quotas, and China is another problem. Many parts of the world has been kind of blocked for Turks. Just managing our exports in a few countries like Israel, Yemen, Ethiopia, kind of. So if I go to country specific, we talked about the UK. There are lots of imports putting pressure for rebar and wire rods. It's down their production 15% compared to 2022. And it's expected to have kind of stability or difficulty in the coming next 6 months or so. In Mexico, there's a growth in the GDP about 3% in 2022. Infrastructure projects are driving the demands. Auto industry and steel industry are the locomotive ones. They do export Mexico, and most of their exports, about 72% of their exports to USA. We talked Oman, our friends from Jindal was there. The demand seems to be okay. There's an increase in the GDP. They do export also. Egypt, Rami is here, our friend. They have talks with IMF. Correct me if I'm wrong. There's high inflation problem. Trade deficit is high. Their main income is tourism and Suez Channel. Exports about 1 million metric tons, I believe, in a year. That's been said in general. Kuwait, there is a ban on exports. Not enough production to cover the local market. In UAE, there is growth, about 2.2% is expected. There are government incentives, growing some investments, kinds of things. Market is expected to be stable in the coming months. Saudi Arabia, as my colleague just mentioned, there are new projects like NEOM and new airport projects, huge projects, if they were to be realized, and they have already started, as far as I know. That will help the markets. Interest rates, though high, that impacts the local market. Demand is expected to grow due to these infrastructure products. whatever projects, capacity utilization is low. We talked about Azerbaijan. They're growing 3% plus. It's an oil-based economy. Construction is increasing, and all production is based on electric arc furnaces. Uzbekistan stable market, GDP plus 6% compared to previous year. Its population is growing. Uzbek Steel is the biggest producer with 1.1 million metric tons, which total is 2.1 million metric tons. Exports to Europe and Scandinavia. Greece construction is the drawing sector. GDP is expected to be around 2.4%. It's a drop compared to previous year. Next year is expected to be 1.9%. So in Turkey, same problems. There are protected measures really blocking the Turkey, as we have explained many times. And also we have discussed this in every meetings almost. Even in the last meeting in Barcelona, there were talks about this. In export, there is a huge drop, probably around 50% or so. In quantity-wise, increase interest rates, inflation is a big problem. There would be some, as my colleague, Mr. Baysal explained, earthquake zone renewal on that state. And our inflation targets set by the government is about 58% by the end of the year. Local market seems to be doing okay nowadays, but for the reasons that I have explained, exports are not. So that's were the findings for exports.
Thank you very much, Mr. Chairman. So let me try to quickly recap what I have heard. Starting with the raw materials, obviously, not only for the raw materials, but for the entire market, China has a huge impact on all markets globally. The growth is down, consumption is down in China. So China's exports have been quite high compared to previous years, recent years, which is having a negative impact on the global market. The production in China is hoped to be reduced during winter, but it remains to be seen. Otherwise, it is still expected to be very difficult for China. But if the production is not going to go down, the exports may still continue to be a problem for the global market. India's strong growth is a big issue in the steel industry, and it continues to attract a lot of scrap into their market. USA obviously outperforms the rest of the world in terms of economy and business terms, and continues to generate decent scrap volumes. But on the other hand, European Union is not in good shape in terms of market, suffering from high interest rates, lower industrial construction activity, also lowering the scrap flows. And for the remainder of the year, the Raw Material Suppliers Committee expects low scrap generation in Europe. Turkey's demand is slower than last year, even though business keeps generating demand, but the economic issues in Turkey continues to be a big problem for everybody. On the traders' side, I understand that the traders concluded that the situation in Europe has changed dramatically because of higher interest rates, slow construction, and consequently very weak demand for rebars and wire rods. Europe, particularly for rebars, and it may be seen that Europe may tighten import quota for the others group in time. China is obviously a big issue for the market. Government is no longer supporting the real estate industry, and that caused housing prices to collapse. They are trying to improve the situation by lowering interest rates, but time will show if the problem will be solved in China, which is a huge issue for all of us. Turkey, obviously, it may be a repeat of the issues, but Turkey lost most of its traditional markets for export. Rebar exports are down by 50% or even higher, and a bright issue, if you like, maybe Saudi Arabia's situation with new projects. I understood 1 million tons per month is estimated to be consumed in the NEOM project. From the producer side, I noted that market is slowing down. Credit is an issue for the producers. Demand is weak, and there is a lot of pressure on prices because of low demand. Countries used to be importers are now exporters in the market, which has changed the trade flows in the long products market globally. UK market is suffering because of high imports of rebar and wire rod. In Mexico, infrastructure is driving demand. Egypt is suffering from high inflation. The UAE market is stable for the time being. As mentioned previously, the new projects in Saudi Arabia will help the market demand, but interest rates are high in the country as well. And Turkish mills are suffering from protectionism, huge drop in exports, and once again, as mentioned previously, interest rates and high inflation constitute huge problems for the Turkish steel industry. Thank you very much, Mr. Chairman.
Thank you.
Now we will continue with the questions we have collected before the meeting. As always, we are open to questions from the floor. At any time, please stop me to raise your questions, or if you like, you can keep your questions for the question and answer session at the end of after the questions we have collected. So I'll start with the first question we have here, and this one is for the panel. The current uncertainty in the global steel and raw materials markets, especially in terms of future price trends, hinges around the issue of demand. How do you view the demand situation in the major markets globally? Do you see any bright spots? Which markets are performing better than expected? What risk factors do you see for global demand? You have already briefly touched the answers for these questions, but if you'd like to recap, starting with the Producers Committee, Mr.
I
Chairman.
can always do so, but as you rightly said, we have talked about it, and I also I talked about it. The long products market is really slowing down in general, wherever you look. Europe is suffering, especially in Germany. There are many problems, price-wise also. Energy costs are an issue. Changing in exports, importers becoming exporters is also another one. Protectionism is another problem. It's kind of difficult to, China, we've been talking about it in every meeting we have, is another issue. So it's going to be difficult for the next, at least the first half of 2024. And see what happens. Where we go from there, I don't know.
So you don't see much light at the end of the tunnel?
Today, no.
I don't see much
Traders?
serious. I don't see any serious bright spots as well, because there's really a global slowdown for the steel industry. There are some, maybe you can call bright spots in Africa and South America, but this is too small to compensate the world's oversupply. So looks like we are into a slowdown for the whole world steel industry.
Thank you. Jens?
I mean, we've just recently seen 5-month high iron ore prices at around $125 in China, and that's due to the production levels in China being at elevated levels. So even though we see slowing down, they're still maintaining quite high production rates, and that's a factor. That's of course why iron ore prices are strengthening. And then the other stronger area at the moment is India. So the two major economies with the most populous countries in the world are both consuming quite a lot amounts of steel raw materials. Yeah,
Both export oriented.
both are export oriented.
Okay.
Okay, thank you. Moving to the next question. This is for the producers. The Turkish steel industry is currently being squeezed by high costs and by poor demand, both domestically and abroad. Its export volumes of rebar and wire rod have both roughly fallen by half so far this year, with strong competition currently coming from North Africa and Asia. Where does the Turkish steel industry go from here? Which export markets can it target in the future? $1 million question.
Yes, but most of the answers have already been given. As we said, things have changed, trade routes have changed, the way of doing business have changed. There are many unknowns for the future. Importers being exporters today, protectionism for Turkey is a very, very big issue. We are out of US, Canada, Europe. We cannot sell anything. So those were the major markets for Turkey. We're doing most of our business in those regions, plus Singapore, Hong Kong, in Southeast Asia. But unfortunately, today it's not possible to send a single ton to these places. So we are just squeezed, as I said earlier, to certain parts, a small part of the world. So we are focusing on Israel, Yemen, and Ethiopia. And I don't know how long this will go. Probably because those are the countries where there is demand, and everybody is focusing in those countries where they can sell their material to. I know some countries is trying to enter these markets. That's also a big problem. But it's yet to be seen. I mean, this is what it is today. So anything else? I don't know.
Thank you very much. Moving on to the next question. This one is for traders. Lower steel export volumes from Turkey have already become the new normal. Do you see any supportive measures that could help to boost exports from Turkey?
Well, the supportive measures normally should come from the government, but I don't think there's anything Turkish government can do without getting anti-dumping slapped on us. But if you really want to remedy the lifting the Section 232 in the United States and the safeguard measures in Europe will definitely help the Turkish economy.
Thank you very much. This one is for raw material suppliers. Mr. Björkman, most major raw material benchmarks like iron ore in China, Australian coking coal, and Turkish scrap have been supported by firm demand in the past few months, but all of them are on average lower than the highs seen in the first half of 2022. Do you expect this support to continue until the end of this year?
Yeah, this is very difficult to answer, but as we have seen a little bit more demand in South Asia for the ferrous scrap and also high production rates in China on the iron ore being at fairly elevated levels. The roundtable session yesterday was fairly negative on inflows of scrap in the Western economies like Europe and the US, but which the session was discussing about could be supportive for the situation. So more of a supply, a weakened supply, that could be a supportive factor, and perhaps a lower a possible export reduction from China, which could be an elevation for example, Turkey. But this is, of course, speculation. Yeah.
Thank you. Next one is for producers, and once again on Turkish producers. How do Turkish steel producers view the monetary policy U-turn in Turkey, despite the need to tackle rampant domestic inflation? Does the change in policy help their business in any way, or has it harmed it? What has its impact been on demand in the Turkish domestic market?
Well, the change in the monetary policy has been viewed positively. The change in the government, you have the new Ministry of Economy and the change in the head of the central bank gave a new breeze to the economy, and it was expected for a long time that the Turkish interests should be going up rather than going so. So this has already started. So this gave a hope to the markets. Local market is doing okay, but of course it depends if the government will continue doing so. That will take. That has to be seen, as also has been talked in Özgür's Mr. Professor's meeting. I mean, explanation yesterday. So this we need to see, but today I can say things seems to be a little bit on a positive side.
At
So
least
this
on
will
a
help for the
sentimental
market
basis.
a little bit. The sentiment is okay, but this has to be seen.
Yes. Thank you very much. Next one is on Indian market, and this one is for the Raw Material Suppliers Committee. India's steel domestic demand is expected to grow by double digits for the third consecutive year in the fiscal year 2023-24. India showed significant demand for scrap this year at a time when demand from Turkey was sluggish, thereby supporting scrap prices. Will India and the Indian subcontinent in general play an increasingly important role in the steel and raw material markets in the months and years ahead? Take out your crystal ball.
Yeah, so of course, India has been an intermittent buyer of sort of scrap from the European and US sectors in the past years, but it has become much more consistent, and it's perhaps not grown so far, but like the installed capacity is increasing quite dramatically, so or quite fast, faster than economic growth, which is also quite high. So it can be expected that India will likely become a larger importer of raw materials going forward, because they are currently, of course, mostly based on iron ore and from the domestic market, producing their own raw materials, but we can expect a larger import of ferrous scrap going forward. Yes.
What percent of India's production is iron ore based?
Oh, I don't know the percentage, but very high.
Okay. Do you see India, well, in time, obviously, becoming the largest scrap importer in the market?
It's a very large country. Yeah, so who knows?
Okay, thank you. Next question is for traders. Moving to the European market, what are the risks for the European steel industry posed by the expansion of Asian long products into European markets?
Well, there are some risks, but I don't think the risks are for the long products. Majority of the influx of materials will probably be on flat products, and if you long steel products in EU, as we have discussed yesterday, are very competitive, and it's hard for the southeastern steel producers to compete with the domestic production in Europe, at least for now.
Thank you. Any questions from the floor so far? No? Okay. Moving on to the next question, and this is for the panel. No tangible surge in steel demand has yet been seen in China. What is the traditional peak season for business in September or October. Will we see such a surge? How effective do you think the recent monetary policy easing and stimulus measures in China will be in boosting the country's real estate sector and thereby its steel markets? What would be the likely impact of improved demand and prices in China on the steel markets in the region and further afield? Who wants to start?
Well, I don't think there will be a much, improved effect on the steel demand. I feel like it will take a long time to absorb the existing inventory of homes already been built. And the monetary policy is really to liquidate this big inventory and these ghost cities, I think. After that inventory is gone, then there will be more construction being built. So I think the effect is not going to be as high as people expect, but it will probably save the industry, the housing industry, and the contractors, give them some lifeblood because they were really suffering, and there's no buyers.
Thank you. Any other comments?
I agree with Mr. Baysal.
I mean, Chinese situation is, of course, going from being a manufacturer of the world towards a consumption economy, and it's going to be a real struggle for a while to do that shift. So just boosting or stimulus might not be enough. Previously, it was enough because it was still a manufacturing country and it needed to invest. You needed to invest in homes, but going forward, that might not be enough.
That's not encouraging.
Yeah.
We need China to be on the driving seat again, right?
Right.
Okay. Moving on to the next one. This is for traders again, Mr. Baysal. China's finished steel exports amounted to almost 59 million tons in the January-August period this year, increasing by 28.4% year on year. The rise in China's steel exports eased the pressure on the Chinese domestic market to a certain degree. Do you think the increasing momentum of China's steel exports will continue? This has also been discussed, but
Yes, of course. And just we said earlier, yes, it will continue. It will. There's two things the government can do is force the idle some of the mills and let them go bankrupt, which I don't think the government will do. So I think the only way out is export, and China can compete at any price in the world. So they can compete, and they will go to the world market.
can I add or follow with a question? Obviously, there's a cap on production set by the central government in China, and the mills have not been following that so far since the beginning of the year. But we still have 3 more months, and there will be, this heating season, blah, blah, blah, and everything. The production cuts may come into effect during the last quarter of the year. Do you think that could help reduce the exports?
No, I mean, there's such large production. I think the cuts that we're talking about is not going to be sufficient. I mean, China does not want to flood the world with steel. That's not what they want to do. But they don't have a choice because this huge industry has to go somewhere, and I don't think that the government will allow the steel mills to go bankrupt. So they're going to go and try very hard. I mean, I have a whole team of Chinese group in my office now, trying to sell to Turkey now. So yes.
Okay, thank you very much. So,
Mike.
one question. Yes, Michael. Sorry. Please.
8 million tons of Chinese steel exports per month is nothing. We lived in a period of almost 15 years where the average was around 6 million tons. And so nothing really has changed. I don't see the exports from China doing any real benefit to the Chinese steel mills because it's such a small percentage of their total production. And if you look at the reason why maybe half of the exports are taking place are because there are domestic traders who are taking positions on the futures market and then covering part of their bets on physical material. And so, but the real effect of the exports is that the Chinese have financed to build new blast furnace mills in Malaysia and Indonesia and Vietnam. And these companies are producing at near capacity. At the same time, Chinese exports are trying to reach the same target markets. So there is a crash between the Chinese mainland exports and Chinese transplant exports.
Mhm.
And we see a little of that coming to Europe and a little of that coming to South America. But this situation is going to, I would say, rectify itself with lower prices. And that's the real effect on Turkish exports
Absolutely.
and European exports and even Indian exports. So that's the negative point. The tonnage is kind of irrelevant. Just my thoughts.
Oh, thank you. Thank you very much for your input. Yes, I would agree with that. I would agree with that. Any comments on that?
Definitely.
No, I agree.
No. Thank you very much, Mr. Setedal. Any other questions or comments from the floor? No, so we continue. This next one is for the producers. Still on the same issue, more or less. Exports of longs and semi-finished products from the ASEAN region have increased, and this trend has started to be sustainable and appears unlikely to change in the coming year. How has it already impacted the Turkish and European steelmakers in terms of their market shares? What shifts in trade flows do you view as being sustainable amid this increased competition?
Well, yes, it's correct. Exports of long and semis products from the ASEAN markets and regions they've been exporting to all around the world, from South America to Europe, from Middle East to Central America, everywhere they've been exporting. And of course, this is taking share from our exports.
Mhm.
And this is a problem, but due to our, as I have also said, because of these issues, we cannot ship to USA, Canada, and Europe. They are just very comfortable doing the business in those countries. And this affects Turkey very much negatively, and they have taken all our shares together with the newcomers on top, like Egypt, Algeria, and GCC. So, unfortunately, not a good news for us.
Thank you. So we are moving on to the next one, which is for the Raw Material Suppliers Committee, Mr. Björkman. Do you see a bigger impact from the import scrap markets in Asia on the benchmark Turkish market, taking into account the rapidly rising supply of ex-Europe and ex-US scrap to Asia?
Yeah, I think we have seen that for the past month. I mean, okay, we haven't seen the prices maybe move up so high, but we've actually had some material removed from the push towards Turkey. So the amount of offers into Turkey has been less. And so the availability has been a bit lower into Turkey, you could say, and so that has also added some pricing on the Turkish market. I would assume. So it actually, yeah, it does remove some supply, which in fact raises prices. But in the last month, I would say that we have had surprisingly steady pricing. Yeah.
Thank you. Next one is for traders. What are your expectations regarding Russian billet and pig iron sales to Turkey after the increased talk about the US tightening its sanctions, especially for third countries using Russian feedstock materials?
Well, it's obvious due to the tightening of the sanctions, imports from Russia will, decrease substantially. I don't think it will go down to zero because there's still some re-rollers that do not melt their steel, but it will be substantially lower.
Thank you. No questions from the floor, no comments. Okay, moving on to the next one. This is once again for the producers, Mr. Chairman. The energy crisis, high production costs, and inflation have added to the difficulties of steel producers in Turkey. The access to affordable, fossil-free electricity is critical for the Turkish steel sector to remain globally competitive. How does the Turkish government plan to support producers in Turkey, particularly in the face of high energy prices?
Well, high energy costs in production of steel is a major factor, of course, for us Turks for not being competitive enough. It's one of the reasons why we are not able to export as much as we used to do, together with all the problems we have talked about. When we compare to Turkey to oil and gas-rich countries, of course, competing becomes not possible. Although energy costs came down relatively compared to the end of last year, still high for competing. Under today's economical conditions, I don't know what the Turkish government could do for us. Well, subsidization, okay, that also brings other problems like CVD cases and so on. But what they could do is just to make corrections in the economy, to do a better job and to have a better future. At the moment, that's what it is.
Thank you very much. Next question is for raw material suppliers. Supply chain pressures have dissipated with lower shipping costs, greater container ship capacity, and shorter delivery times. How do you assess the prospects of the logistics market for the transportation of raw materials?
Well, we've seen dramatic drops in container prices due to bottlenecks being sort of removed after the COVID pandemic situation, when we had huge bottlenecks and extreme prices on freight for containers. But in the last period, we've seen, of course, a less of bottlenecks and a lot more attractive rates for containers. On the other hand, just lately, we've seen bulk shipment freight rates move up quite dramatically. So it's a very shifty market, but the lower container rates have absolutely generated stronger supply from US and Europe towards containerized destinations such as South Asia, which has absolutely been strong in the past few months.
You know, I think the shipping rates came to a healthy lower value, where in the past there were times where shipping price was too high and they
Right.
were making too much money. It didn't, it was not sustainable. And there were times that the shipping price were too low and the shipping companies were really hurting. So right now we're in an equilibrium area where I think it's sustainable for as long as the oil prices or the bunker prices remain stable.
Well, the very long period of extremely high
Yeah,
freight rates has also generated huge orders of new ships
exactly.
for container lines. So whenever you have a shipping company and you're making a lot of money, you order new ships because you see that you can make a lot of money. But when all those ships arrive, the freight rates collapse, and that's what we're seeing now. That freight rates have come down, and all these new buildings are coming online, and they have not been scrapping ships in the last few years because the freight rates have been so high. So now we will most likely see a lot more scrapping of old ships, and they're taking in new container ships, and it will be a challenge for them to make freight rates come up for a period of time, I think.
They also took some of the old containers out of the inventory,
Yeah.
and actually charged to us some of it by saying that you damaged the containers. And we tried, but you can never win with them because they have a army of lawyers. So we end up paying for the containers for them to renew their inventory.
Thank you very much. Any questions from the floor before we move on to the last round? Okay. So this one is again for traders, Mr. Baysal. The Chinese government has stated its aim of keeping the country's crude steel production in 2023 within the levels seen in 2022. Most Chinese steelmakers, however, have postponed making the production cuts needed in order not to exceed the 2022 output levels until the final months of the year. What impact do you expect the anticipated significant drop in Chinese production to have on the global steel and raw material markets, which are already depressed by uncertainty and sluggish demand?
I guess this question is if really China drops the production, which I don't believe they will. But if they do, we have to look at the present situation. From what I understand, more than 90% of the blast furnaces are operational today versus only 50% of the electric arc furnaces are operational. Therefore, if there will be any reduction, it will be more on the iron ore side. So if you want to see the effect at that time, it will be more on iron ore rather than scrap. And actually, China is not a big scrap importer, and I think there is even a restriction on 80-20 scrap to be imported into China. So the effect really, if it does happen, it's a hypothetical case, it will be on the iron ore.
But you don't expect any production cut there?
No.
No, not at all.
No.
Okay. Thank you very much. Moving on to the next question, which is for the Producers Committee. How do you view the current situation as regards the option of billet versus scrap for EAFs? And how would you compare EAFs and BOFs at present in terms of production costs? How do you foresee this picture developing in the next 6 months?
Well, as far as I know, there are many variables when you compare these two. When you look at blast furnaces production, we talk about iron ore, coal, and coke. On the other hand, when we talk about electric arc furnaces, we're talking about scrap and electricity mainly. So depending on the market conditions, these things, which better than the other one might change. But I think we have to look for the future, how this production will evolve in the coming years because of the green steel. So as far as I understand, when I read it, by today, 78% of the production is based on integrated mills, and about 28% is based on electric arc furnaces. But by 2050, I think this will be 50-50. So things might, will change a little bit, but it's not easy to say something definite for this or that.
Any comments?
Any comments, if there is, what I would also appreciate.
Panel or from the floor? We are going to see a lot of changes in the coming years.
Because of this green energy,
Yeah.
things will change a lot. And this is what we have to focus on rather than talking today, which is better than the other one.
Sure. Okay. This is for raw material suppliers. What's the current situation in the financing of trading of scrap and or other raw materials?
So with the higher interest rates in most areas, financing has been really a challenge for many companies. And if you look at short sea financing around the Black Sea, it's been terrible conditions in the last 6 months with extremely low ability to generate volumes and be able to purchase material on the docks. But and also you see in areas such as Pakistan, one of the larger buyers of containerized material, with a growing steel industry in need of raw material imports. They have had huge difficulties in the past year to handle letter of credits, trade finance, which may be calming down now with IMF loans and things, but we still see difficulties in these sectors.
Actually, on the trader side, this is a big problem because at least I know what the American side is. We have the what you call mid-sized banks, which are close to $1 billion assets, have been shrinking, and some of them really went out of business in the U.S. And this is because of the high interest rates and people moving their deposits from those banks to the bigger banks or the different financial institutions. So when the bank still doesn't have the deposits, even though you are in good standing with the bank, you cannot get financing. So we noticed that some of our customers are struggling to pay their bills, and these are good customers, but they can't get loans. When the loan came to renewal, the banks cannot renew at the same rate or at the same amount. So there have been serious reduction in majority of our customers, and this is really showing. Interest rate is important because in the past we used to give 60, 90 days to a customer and really didn't blink about it. But today, after 30 days, we start calling them because it's like 75 cents every 75%, 0.75% every month. It makes a difference for you. So it's become a really issue, and it has changed the way we operate from giving long-term terms to the customers to really tightening it. And also the companies who brought megatons to US and putting in the port and trying to sell, now they have to think twice because the cost of that inventory is a lot higher than it used to be.
And another factor is that credit insurance has been very tightened. So giving long payment terms in a high interest rate environment with credit insurance being reduced in some cases at least, or even if they are maintained, it's challenging to work in this environment. So it's been a real challenge in new environment for many.
Sure.
It's also a problem for exports. When our customers used to open LC very easily, today it's not possible. You sell to someone, and somebody else opened the LC for you for them.
Yeah.
And because it's not easy for them, as you rightly say, also their credit insured numbers also.
It's
much
credit
lower.
insurance,
So a lot of
and
problems.
also the banks don't
Exactly.
have the funds
Yeah,
to be able to
banks
give
are
it
not,
to them.
yeah, exactly. That's what happening. It's affecting all parts of the business.
Frankly, I was surprised that this whole subject didn't come up much in the conference, because I think this is one of the more serious crises waiting to happen in the next probably 6 months to a year.
I believe it's taken for granted that today everybody knows what's happening.
Then again, of course, when you put in perspective what's going on in Turkey with the high interest rates, we're talking about only 7%, 8% rates. So to us, it's high.
Percentually,
It's all relevant.
It's all relative, exactly.
But definitely it's tough. We are living in tough times, right?
Exactly.
In the steel market. So yeah, moving on to the next question. This is for the panel and the last one. The massive schemes put in place to deal with the pandemic and the war in Ukraine have created a subsidization race between the national governments in Europe that is hurting Europe's single market and the bloc's competitive edge. The main European steel industries are in direct competition with the United States, where the Inflation Reduction Act is offering generous green subsidies and tax cuts. European countries have also seen key investments go to China, adding to the fear that Europe is losing its industrial base. Will the approach to industry subsidies in Europe change in 2024?
I don't think it's going to change. It's probably going to grow more. I mean, I noticed what the European Union did to automotives, and they noticed that a lot of electric cars are coming. The battery operated cars are coming from China, and they just decided to put I think 25% tax or a huge tax on it, and to protect their own industry. So obviously, Europe is very much into protecting their own industry, and I think it will continue. I also heard that, like in England, Tata Steel got a serious gift from the government. I mean, serious gift, and under the name decarbonization protection, something like that. And in the past, ThyssenKrupp got even bigger subsidy, and to avoid, the breaking up I mean, actually to help breaking up the company and survive. And I used to think that they're basically dead men living, but walking, but they got so much money back, and they're up and going. So in a way, I think that there are some others who are thinking that they should buy more mills in Europe, knowing that somehow they're indestructible because the government will somehow come back and help them out.
Yeah, I mean, everyone is trying to hold on to what's theirs today. So all the governments, I believe, will do the most in their power to protect the industries that are in trouble or they have been attacked by other countries in terms of exports or whatever. So I agree with Doğan. I don't see any change in this.
We would like to see the change.
But
That would be only fair,
it's
but
very,
no.
Any comments from your side, Jan?
Well, I mean, the European powerhouse previously was always Germany, which was exporting a lot of their manufacturing to China, which was growing. And now he's slowing down and more protectionism. And this is really hurting the German export-oriented economy and also Europe in general. And it will be a challenge to handle that slowdown. And of course, they are doing their best to also try to shift the metallurgy of the steel industry from blast furnace based to electric arc furnace during the coming sort of 8 to 10 years when carbon dioxide emissions. They're also adding the carbon border adjustment mechanism. I think companies need to start recording their carbon emissions from next month already, and they have to start paying from 2026. So a lot of things are happening in the European sector to try to protect the market.
It's really is not a fair or equal field for everyone. If the same subsidies are given by the Turks or Africans to their mills, they will be hit with serious, anti-dumping or countervailing duties. So, but Europe and United States does that under, so they've just find a good reason or
they say to us
good
that
way.
you cannot use any Russian material in your production to sell to Europe, but they also import scrap. I mean slab.
Slab.
So I mean there is, you don't know what. It's very strange.
Actually, what Murat is saying is so true because the Turks cannot import billets or scrap or should not from Russia, but Europe does, the Slavs at least.
And they'll tell you no, but they do it.
Okay. Any other questions or comments from the floor on this particular issue or any other issue? Because this was the last question I have in my hand. Yes, we have 2 questions. Let's start with Rami.
Thank you for the interesting session. We are all seeing, some drastic challenges with the steel industry. I mean, core challenges, and it has been, growing with a few previous years. Don't you see that it might be a time to think about some restructuring in the industry itself? Because actually, to continue feeling, like helpless or not able to do something, that might make things worse in the coming periods. I mean, it's against our nature for sure. Normally, people would be pro investing or increasing capacities or creating new jobs, etc. but it's against our, nature to like cut production, making some restructuring, some merger and acquisition, um, reducing jobs, etc. But I'm afraid maybe with the time, with those issues we are all facing, if they continue to grow like that, it might make things worse. So I don't know what the great panelists will think about that. Isn't a time to think about more merger and acquisition, cutting production? I don't know.
I guess every steel mill thinks that the other one should cut
Yeah.
because they can't cut because they got things to do.
But today, when you look at our production in Turkey, it's cutting itself because there is no demand for exports. Our export numbers is much lower than what it was last year. So the market finds its way by its own today. But if this prolongs for a long time, as you rightly said, there might be some changes and some companies might change hands and everything is possible.
With all these protective measures,
Yeah.
the economy, I mean, actually, is becoming, the steel trade is becoming more regional. So pretty soon, those guys who are thinking that they can sell all the way to China will not be able to do that anymore. So really, it's going to correct by itself. If you can't sell, what are you going to do?
I agree with you, but we say it's becoming regional. It's becoming regional for some countries, and for some countries, it's not becoming regional. Like today, for Turks, it's becoming very much regional because we cannot export to certain countries where we used to do most of our businesses. But when you look at the countries from Asia and Southeast Asia, or from Egypt, or they've been shipping to all parts of the world. So there's no regionalization.
Yeah.
It's, I don't know, it's a strange times and really hard to get it together.
They were not under the radar.
Yeah.
The moment they get under the radar, trust me, the markets that they go will wipe them out.
Sure, definitely.
That's why Turkey has been under the radar too long.
Yeah, just a small comment. Don't you see that the merger and acquisition can help? I mean, if there is a large merger and acquisition taking place, so that instead of you are having too many players, no, I'm not speaking about Turkey only by its own. I'm speaking about, most of the countries that they are suffering from the low utilization and the oversupply. Don't you see the merger and acquisition on larger scale could be an option?
It's a possibility,
going
but I
on.
can't answer to that today.
And you see some of it, I think, in the U.S. market, for example, where you see mergers and companies taking over parts of others and so forth. And I guess we probably see it in Europe as well. Yeah.
Perhaps in other countries, in certain countries, it may need to be incentivized as it was back in the early 90s by Europe in Italian steel industry. I don't know, perhaps. Thank you very much for the
Thank you,
question.
Rami.
Michael, can we have the microphone? Yeah.
I thought I'd leave the group with some thoughts for ahead of the Berlin meeting in 6 months' time. I think that the US euro currency will reach parity,
Right.
which will create a lot of opportunities and also hindrances. Both North America and Europe are going to evolve into a carbon border adjustment tax on imports, which will be offset by the removal of the sections 232. I believe also very strongly that the United States will never put a carbon tax on its domestic steel industry. And then today or yesterday, US Steel announced they're going to make about $550 million EBITDA in the third quarter. So big steel and blast furnaces are back. I believe a lot of the electric arc furnaces are going to have trouble to compete with blast furnaces. And the only way they'll be able to do that is if there is some sort of carbon tax or some incentive. And then lastly, we have the situation that medium and long term, I believe very strongly, and I think experts also agree that scrap prices are going to be higher. It's going to be more costly. And so we are looking forward to a very interesting future.
I think even though in the US they put a carbon tax, they will not take the 232 out because it's already out for any country that they want to do trade with. But sadly, I noticed that most of the Islamic countries, almost all Islamic countries, have 25% Section 232.
Yeah, but
and now India is going to come out too. So really, I mean, you're talking about Canada, Mexico, Argentina, Brazil, Korea, Japan, and Europe. Now India is out. What's left? Australia is out. So really, it doesn't matter anymore. This is one tax that they just like to, keep. Let's say Turkey and some countries in North Africa at bay, and the rest is fine. So if they put a carbon tax, they're going to put that at the top of it. And frankly, Turkey should not worry about it because, I mean, normally, if you think about it, when you're an electric arc furnace base, then you have a lot less to fear. And the countries like you just mentioned, U.S. Steel is all blast furnace production, so they should worry. And they have the oldest mills. I mean, those mills are really not state of the art and should be out of business. U.S. Steel should have been out of business a long time ago, but it's still operating.
But the Americans have put that on the table in negotiations with the EU about removing the sections 232 and replacing with the carbon border adjustment tax. So that's
That would be
already being
nice.
discussed. And if, for example, Turkey as one country, you'll have one carbon border tax, and probably it's going to be 27.8%, as a guess. It's going to replace the 25%.
Thank you very much. Any other comments or questions from the floor? No, I guess so. I like to thank you very much, Mr. Chairman, Mr. Jens Björkman, representing the Raw Material Suppliers Committee, Mr. Dan Baysal, representing Traders Committee, and Mr. Murat Cebecioğlu, representing the Producers Committee of IREPAS. Thank you very much for your comments, responses, and all the contributions. I also would like to thank you all for your participation in this meeting and during the course of these 2 days. I'd like to remind you that our next meeting, the SteelOrbis Spring 2024 conference and 90th IREPAS meeting, will take place on April 28th to 30th, 2024 in Berlin, Germany. I also would like to thank all our sponsors, starting with our platinum sponsors, İçtaş, then Kocaer Steel, Ekinciler Iron and Steel, Kardemir Çelik Sanayi, Alex Stewart International, Belgian Scrap Terminal, Jindal Shadid Iron and Steel, Almet Holding, Aymaş, Birim Makina, Borachart, Can Güller, Formar Shipping, and Stalex for their unstinting support to us during the organization of this particular event. Hope to be able to see you in 6 months' time, and thank you, ladies and gentlemen. Bye-bye.